Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zach's senior strategist, Kevin Cook, to discuss all the market madness, the hot market, the Wall Street bets, Reddit moves. What's going on? Are you chasing the last hot stock? Should you be chasing it? Or should you be on the sidelines? Kevin, welcome.
Hey, good to be here, Tracy.
I feel like everyone is chasing. There's just money sloshing everywhere. There's a lot of money coming into the stock market for the first time right now. And because suddenly everybody realizes, hey, the stock market is hot. And they're all coming in.
Yeah, it's pretty crazy. I just saw an interview with Jason Calacanis.
Okay.
You know who that is? That's
No.
That's you see him on Twitter. We follow him all the time. He was an original investor in Robinhood.
Okay.
And so he's buddies with Howard Lindzen, who was also an early investor in Robinhood.
The founder.
And he was on John Ford had him on CNBC on Friday, I think. And John's like, "Hey, Jason, we just had the Winklevoss twins in here speculating on a rumor, unsubstantiated, that some members of Congress or the feds told Robinhood to restrict trading, so that GameStop and AMC don't keep going higher and save the hedge funds." Well, that's a lot of speculation there.
Right.
and Jason with John Ford, he's basically like, "Listen, I have no information on this, but take the Winklevoss twins at face value there."
Yeah.
But he as an investor, he talked about why he initially invested in Robinhood, and that was because when this guy Vlad came to him and said, "This has got to be the way we get millennials to trade," Jason was like, "You had me at millennials, basically. Yes, if we can capture millennials who do everything on mobile, and and many, maybe some are living it with their parents, whatever. Let's get them into trading, and how are you going to do it? Oh, we're going to give them free trading." And Jason was like, "You had me at free." He thought it was a great idea just to capitalize on this big trend. But here's something he wrote on Twitter last week that I thought really kind of summed up, what's going on with Robinhood and the millennials. He says, "I don't think our stock market is designed to handle tens of millions of retail investors acting in unison on social media, which is a great opportunity to build out the infrastructure, make it more transparent, and crush the bad actors. This is the messy middle of a revolution." Yeah. And I thought that summed it up. And obviously, Robinhood has had to raise capital just to keep up with the demand of, the new downloads, the new accounts, whatever.
Right. Yeah. The interesting thing I feel about the whole Robinhood aspect of the story is that it's not new. Everybody's acting like, oh, Robinhood, it just caught on. But Robinhood, I did a podcast with the millennial interns in our office at Zach's about Robinhood. I used to do it every summer, the same podcast, like, are you on Robinhood? Are your friends on Robinhood? Because they were targeting the millennials. And, a lot of them, some were on there, a lot of them weren't on there. And that was like, I want to say 3 or 4 years ago was when I was asking them these questions. So apparently, I don't know, I guess I was ahead of the surge here because it's been around a long time. And then they obviously had the free service. And so that made it super easy to trade on. But the other brokerages matched that free trades a year ago, at least.
In 2019, we had the big broker wars. Yeah.
Okay. It seemed like it was just recently, but no. So that's like 2 years ago now is when they did have to respond to Robinhood because it was gaining accounts. and taking away some of their business. So they did have to compete and go to the zero trades as well. They still have, I think, a bigger minimum requirement. Like you need a little bit more money to open up some of those accounts, but it's still relatively, low. So now to have Robinhood all of a sudden, explode in this way. And I feel like that's an interesting side of the story, because it has taken, let's just say, about 4 years for this to come to fruition. And maybe it is because of the pandemic and people are, have less to do. And as we saw in 2020, they started trading then because there was no sports on TV and, there was not as many opportunities to gamble. Nobody could go to Las Vegas or whatever. And then they discovered stocks in 2020. And now we're kind of in a similar situation, I feel, in 2021 with like semi-partial lockdowns again. There are some sports now, but we can't go to the games or anything.
Yeah, well, let's talk about the elephant in the room, which is the GameStop short squeeze and Roaring Kitty on Reddit.
Yeah.
So, I mean, you're right that Robinhood is not new, but
right.
What made it become headlines that even your grandma was hearing about it,
right,
is that, this whole short squeeze in GameStop and he's called Roaring Kitty on Twitter, but he's Deep Effing Value on Reddit, and his investment in GameStop, which all of a sudden just started to really gain momentum. And then you're seeing all these guys push in to the stock and open accounts. Right. And so it made everybody start trading. And I have a funny story about my millennial son, who thankfully I taught him to save and invest, but he decided he was going to join the trading frenzy. Okay. So first, let me just say something about Roaring Kitty and Deep Effing Value on Reddit. I went back this past weekend and I watched some videos of his. This guy is not some chat board pumper. He was doing deep fundamental analysis on GameStop in 2019 and in 2020. And I watched a video of his from July. It's a 56-minute video. And the guy is super sharp. And Tracy, as a value investor, you'd probably very much enjoy listening to the whole hour of him go on. This is when GameStop GME was still trading at $4. And he just laid out his fundamental thesis. And he already had sort of a YouTube following. And he's like, you know what, guys, I've made a lot of mistakes. I'm just going to share my thesis on this one. And if you think I'm wrong, send me your thoughts. I just want to hear what people think. And he goes on for almost an hour like this. And he looks at the balance sheet. He looks at the business. He takes on, all the news, all the negative things. Like, what's the worst thing you could say about GameStop is it's the next Blockbuster, right?
Yeah.
So he takes that on and he says, even if it has a terminal value of 0, he says, I don't think that's happening yet, because he looked at the stats. He's looking at lots of different places to gather fundamental information. He was looking at what are the percentage of sales where people want the hard disk for their game versus digital. You're like, everything's going digital, the next Blockbuster. But he said, no, a lot of gamers still want discs. So the terminal value of GameStop may be 0, but it's not happening in the next 2 years. So he's like, and yes, sales had declined from 9 billion to 5 billion over 2 years, but they were sort of leveling off at 5 billion a year. And he's like, the company's trading for $260 million. It was 4% it was trading at 4% of sales. We talk about price to sales multiples, right? And this thing was trading at 4% of sales. And I was with him all the way. I wish I had seen that video. I would have been buying. And so even a few months later, when the stock got up to $20, he's like, you know what? This is great. We've done it. And this was like in the fall, maybe even December. I'm not sure, but it got up to $20, and he was, they were kind of high-fiving. And he's like, listen, this is what I thought it might be able to do. I thought it was a double, maybe a triple. here we are. And then all of a sudden, the Reddit army gets a hold of it, and the thing just explodes in insanity where people are paying too much for it. Right now it went from 4% of sales to 400% of sales. Trading at $20 billion.
Right. But did he sell out in December?
We don't.
As much. He's close to $40 in December. He sort of went offline in the past few weeks because his phone was probably ringing off the hook, and he's got a family, and he probably just realized he needed to shut down a little bit because he was probably just being flooded by, thousands of messages a day on Reddit, and he gave the Wall Street Journal an interview, and you know what, somebody posted a picture of him in his basement, he's got a red headband on, and they're like, this looks like a typical Reddit trader, but he's not. The guy obviously worked in the securities industry. He learned fundamental analysis. He learned how to model. He learned how to create a spreadsheet model of, projected sales and earnings. He's very sharp, and, but he created a firestorm. Well, that's like, it sounds to me like it's like Michael Burry 2.0.
Well, and you know what? Burry may have been involved. Wasn't Burry long too?
Yeah. But Burry's whole career started, I think, on the Yahoo message boards during the .com boom.
Right.
Where he would go to work at the hospital because he was a doctor, and he just loved value stocks, and he would go home and spend a couple hours posting his thoughts on various value stocks, and he got this big following on the message boards, I believe it was. And then he did the short that, on housing on the NBS that really made his career. But then after that was done, he got out of investing for a little while and then came back in and has been back to the value stocks, including GameStop, which he was in 2019 as well. Sounds similar. And then he did get rid of a chunk of his position during the coronavirus sell-off last March in 2020. But as of the third quarter, he still had over 1 million shares. But we don't know what he did in the fourth quarter. Did Burry sell out when it got to around $40 as well?
Yeah,
we're about to find out with the 13F in like 2 weeks, right?
Yeah. And so looking at GameStop now, and we talked a little bit about this last week and over the weekend with some people that, that this was going to be a bloodbath because you were going to have all these latecomers buying it. Right now, the stock is trading under $100, down, over 50% today.
Yeah.
And so let me tell you the story about my millennial son. So he's in the Marines. He's married. He lives off base out by Camp Pendleton. But he already had some savings and was starting to do investing. I was talking to him and his wife about it. But then all of a sudden, he's on Reddit. So he's calling me going, Dad, what about this? What about this? What about this? And I'm like, no. Do not go near GameStop. I'm like, a lot of people are going to get burned. Like especially when you saw late last week where the Reddit army is like, we have to hold. Don't let Wall Street take us down. Hold your shares. I'm like, oh my God, this is the worst advice. This is not how markets work. There's too many players. There's too many sharks and predators in the jungle. And I said, a lot of people are going to end up buying the highs above 300. And you saw that volatility last week. I'm looking at, what was it? Probably Thursday, it soars up to 480. Friday, it tries for 400 again. And then Monday, the real selling begins. And I'm like, a lot of these little guys, I knew they were going to be buying the highs. So thankfully, I kept my son from not buying GameStop yesterday.
Okay, good.
But he did buy AMC.
Oh, no.
And he didn't ask me first. He just said, Dad, I bought 70 shares of AMC. I'm like, oh, shit. So that means, and I'm looking at AMC, he didn't even know what a market order was. He used a market order. So he ends up paying probably $17 for AMC. It's trading $8 now. Okay. So this is what I told him yesterday. I said, I tried to, I wasn't going to say sell it now. I was just going to let him ride it out as a learning experience, because if he bought 70 shares, he's got $1,100 in it, right? Right.
worst.
He can, that's good tuition money. He's going to learn.
Yeah.
So I told him, what I did is I started painting a scenario he probably never thought of. I started talking about support. And I said, with this volatility, support is probably somewhere below $10. And I don't think he expected to hear that when he just paid 16 or 17. But I was like trying to paint the picture of reality that, and I said one thing that was encouraging is that you remember when sort of on the reopening trade in late summer, into September, lots of things rallied. You had the cruise lines rallying, AMC rallies back to $7. I'm like, so on that sort of reopening optimism, I said, maybe you're going to find support for this stock again near $7.
Yeah.
Well, that's exactly what's happened this morning. Is it bounced off of 6? It's trying to hold on to 780. And hopefully my son is learning his lesson about volatility. And, I don't know where he's going to get out. He's texted me a few times this morning about other investments, but he hasn't said anything about AMC. So we'll see.
Are the others in the same similar volatile, like Reddit type stocks, or are they just regular stocks? The non-Reddit.
Other things that he's doing?
Yeah.
No. Actually, he's actually he's kind of all over the place. One thing is I talked him into ETFs, him and his wife. I'm like, okay, let's pick a few solid ETFs for the long term.
Yeah.
Then we'll maybe pick a few, bigger quality stocks to trade. But then he did start asking me about penny stocks. So I said, listen, Chris, I don't go near them. I mean, I own some $5 stocks that are sort of, if then maybes in biotech, but I don't do anything with stuff, under $2.
Yeah.
And I said, if he goes, but if I do it, I could just sort of get to know things like, he's got a Fidelity Active Trader Pro platform. And I said, yeah, for sure. I'll tell you exactly what he just texted me. He goes, I understand you're not messing with penny stocks, Dad, because that's not what your investors expect. But if I just, played around a little bit with some small money and cut my teeth on some of that while I get a feel for the markets, he goes, does that make sense strategically? And I said, absolutely, it makes sense, because when you put your money on the line, it captures your attention in that investment. And then you will do more homework about the fundamentals and maybe the technicals of swing trading. And so I said, just go very small. If you like something, it's 40 cents. You saw it on Reddit, throw $100 at it. But, keep the tuition low right now while you're learning.
Right. And I do feel like the penny stocks, that is a good method for those who want to learn how to trade, but not those who want to learn how to invest.
Correct.
It's like two different things.
Yep.
But yeah. What kind of advice do you have? What if he were to get into or had gotten into one of the secondary stocks outside of GameStop, AMC, or let's just include Bed Bath & Beyond in there too, or even Express, because those all soared. But there was a small little energy company, I don't know if you heard about this one, called New Concept Energy that the Reddit crowd went into last week in the end of January. It's ticker GBR, and it went from $2.30 up to $30.99 in one day.
Ooh.
It was 21-year high. They actually do have a business. They drill in the Appalachia. They drill about 70 barrels a day, and they have 5 employees. So there must have been some kind of big short in this or something, which is why the Reddit's guys went in there. So it soared, and now it's back down to $6.75 here on February 2nd.
What's the stock symbol again?
GBR.
Oh, GBR. Okay.
Yeah. Concept Energy. So what if someone, was lured into this one? This one isn't even like an AMC, which has that kind of support on the reopen kind of trade. This is just like some small little energy. I mean, basically, it's going to go back to where it began.
Yeah.
So get out now and take the loss and learn the lesson.
Yeah. Because you have no basis to be in the trade other than the short covering, and now that's blown out, and you have no edge. The thing I learned short-term trading on the floor of the Chicago Mercantile Exchange 25 years ago in the 90s, and everything was about what's your edge. And these are guys trading commodities and Japanese yen and pork bellies and soybeans. They were not doing everything on fundamentals. They also understood I have to have a trading edge. I have to know that I have a reward that could be at least twice as big as the risk. And you have nothing like that here.
Yeah.
Last week when we first started hearing about GameStop and Reddit and Roaring Kitty and Deep Effing Value, I thought that what was happening was some smart traders were getting lists of companies with high short interest and then just pumping them on the Reddit boards. Now, that was before I knew that Roaring Kitty was actually a true fundamental analyst. But I bet you that's still going on. They're getting a hold of the lists, either from a broker or shortsqueeze.com of what companies have high short interest, and let's go after them. And so that's what somebody did with New Concept Energy, GBR. And yeah, for the people who paid over $20 or over $15 even, they're in a world of hurt right now, and they probably don't know what to do. And if they believe the crowd, if the Reddit army is sort of, if the smart guys are playing sharks and getting the followers to, hey, no, hold the line, right. That's unfortunate.
Yeah. Okay. Now, what do you think about the silver trade then? That's the next thing that they're all rotating in, including the miners.
Yeah. Now with silver, there was probably a strong fundamental case that silver was greatly undervalued relative to gold, right?
Yeah. I mean,
a few months ago, right?
Yes, so, it was on the move, or late in 2020.
Right. So, you did have a fundamental case there, at least relative to its big brother in the precious metals, gold. It was very undervalued. It had not participated as much, and
right.
so I don't know if there was a lot of short interest in the futures market in silver, but they went after it, and I don't even know where it is now. What kind of
pulled back? It's back down under 30 again.
Okay.
But and all the mining stocks, those soared, but not as much as like a GameStop or an AMC. They were up like 20, 30, 40%, but those have back now too.
Yeah, so I'm looking at the February contract of silver futures on COMEX, and it started a decent rally in December from $22 up to 27. Stalls this year around 25, and then they spiked it up to 30. So the only thing is if you were actually trading silver futures and using leverage, those are big swings that cut with a knife, because you're trading on really on margin that is has a lot of leverage.
Okay, but regular investors should just stay clear of.
Yeah, I mean, I my long-term opinion on gold. I'm a gold bear long-term, so I'm not buying gold at 2,000, looking for it to go to 3,000 when I think there's so many better opportunities in software and biotechnology and artificial intelligence. I'd rather invest in something that I really understand, other than the speculation that easy money is going to send gold to 3,000.
Right. Okay. What about chasing any of these other, just the non-Reddit stocks that are all surging here? And I mean, we could do like a huge list of everything that's.
Yeah, give me a few.
Well, let's talk about like Chipotle. They're about to report earnings. They're at all-time highs here into this earnings report. They're trading at 69 times forward earnings now.
Wow.
And they just keep running. But what about something like that? Do I, if I'm not in it, do I want to get in it at this price?
I do not think so. No, okay. This is, and I'm not saying that this is the top for CMG and it can't go to 2,000, because it certainly can. Yeah. I see it trading 1545 here, new all-time highs. It's like if you were the time to be a burrito bull here, was last year when, I thought that the pandemic was going to kill, all these quick service restaurants.
Yeah.
But Chipotle obviously has management that, could adapt, innovate, see around the corner, and find ways to keep those burritos moving, whether that's with Uber Eats or whatever. And they obviously pulled it off at the expense of their competition. I always hate when I see a small Mexican restaurant go out of business.
Yeah.
But I would not be buying it here. I mean, it's the investors who were early and saw the company's ability to adapt and innovate. They're getting rewarded here. I actually tried to short it once last year around 1,000, and that didn't work out. So I just left it alone.
Right.
When I saw that, they really did have the ability to adapt and innovate. And so now, if they report and, the stock goes up another, 60, 80, $100, probably blowing out some shorts there. I think Einhorn was a big short years ago in this thing. It'll probably come back down. So I would, if you want to be a Chipotle investor, I say wait till the next correction and maybe you'll get to buy some around 1,300.
Okay. So is that the decent advice for everybody who's looking at any of these really hot names? Because you have to know your story. And what I mean by that is not just anybody else's story who's trying to sell you the stock, but have you done the homework? Let's use NVIDIA. NVIDIA has been going sideways here between 510 and 550 for quite a while. 4 months.
Yeah, and I think the next big leg will be upwards. And I've been waiting for another dip under 500 because I already own some. We bought it during the pandemic at $200.
Wow. And
I would like to buy more. If it dips down to 450, 480, but it's just not doing it. So would I tell people, so I see NVIDIA as different than Chipotle. I'm like, yeah, you could buy a little bit here. You actually could, because NVIDIA will be over $600 sometime the next year. But maybe you wait for a dip too. But I just don't see it as overvalued because I understand the innovation at NVIDIA and what it's doing in the economy. Like Chipotle doesn't have a ton of leverage over the whole economy, right? They're probably doing the best they can, whereas NVIDIA is the future of artificial intelligence. And their stack of software and hardware is simply amazing. And they will continue to grow market share in all the advanced technologies as they converge.
Yeah. So how do you stay on the sidelines? Like with an NVIDIA, which I own in the insider trader actually here at Zacks.
Okay.
And we've been holding it for 4 months, waiting for it to either break higher or go lower, but it doesn't do any, as we just discussed. So that one isn't hard psychologically for an investor. Like if you are thinking about getting into it, you're not missing out on anything because it's just sitting there in that narrow trading range for months. So you don't feel anxious when you look at it because it's going nowhere. But some of these other ones that like seemingly hit new highs every week or every day of the week, and not the Reddit ones, they're just other hot stocks. Those, if I wanted to get into it like a Chipotle, I feel like it's running away from me if I wait on the sidelines for a pullback. So how do I psychologically control my emotions so I don't just say, oh, forget it, I'm just buying it here and jump in?
That's a great question. I mean, it is the ultimate challenge because in markets, both in long-term investing and in short-term trading, you are your own worst enemy. Right. So you're not battling the market as much as you are battling your own mind. And I'm not just talking about emotions. I'm also talking about have you done the homework on stocks? Then have you also developed a systematic discipline? I just talked about this in Taser last night that look at poker as an extreme example because my millennial son is a really good Texas Hold'em player. Okay. And he understands the psychology. He understands the odds of poker, but he also understands how he's playing the man, the person across from him betting. And that's a game with especially no limit Hold'em where you can go all in. I mean, that's a game with extreme volatility. It's all or nothing all the time. Very few people will make a living at no limit Texas Hold'em. because of that kind of all or nothing volatility. When I look at that, it's like investing in trading is actually easier because you can be systematic across sectors, across time frames, and you can have different buckets of money. So you got a bucket of money that's long term. You're buying ETFs, looking out 10, 20 years. You've got a place where you like to dabble in a few stocks. Then maybe you're doing something more speculative. And you just have to look at things in different time frames and with different risk parameters. So for, it all, we always ask people, like, when somebody says, should I buy this? What's our first question is, well, what's your time frame? Is this 2-year money or 20-year money is the first question. And then what else are people doing? Do they have long-term investments where they could speculate on something like NVIDIA or Chipotle and not get hurt? But to fight that urge, I just think, like, I guess the thing I would say is there are so many opportunities out there in the stock market. I mean, we are so fortunate to not only have lightning fast trading on our Schwab account, but zero commissions. But there's 1,000 different ideas out there. There's 3,000 if you want to just look at the Russell 3000 index. I mean, there's no shortage of ideas. And I run a healthcare portfolio here too, and we just had some great success with some of the vaccine stocks. We took profits in Moderna and Novavax. I actually sold Novavax too early. Well, there's a good example right there. We just made like 75% on Novavax in less than a month because I thought it was undervalued at 120. I thought, man, they are not valuing the potential of what Novavax could do with their vaccine. Sure enough, the data comes out in the UK, phase 3 trials, 95% efficacy, 86% efficacy against the new variant, and the stock soars above 200. And so I said, you know what? This is still not approved in the US. Even if the UK approves it, there are many vaccines out there, and countries will want a lot of vaccines and from several different providers to have a diverse, attack. But I thought, you know what, I'm going to take, so I sell Novavax at above 210. And then the next day, yesterday, it soars to like 260 because somebody upgraded it to a $300 price target. And of course, I get a few emails. Hey, why'd we sell so soon? And I'm like, because I said I would not change a thing. If you go back and read my 4-point rationale for selling, I believed that at the time. That was the rationale I had at the time for selling. So I don't regret leaving that money on the table. So you've got to have a systematic way to make decisions, and there's just so many opportunities. Like that's why I owned 2 vaccine stocks. I owned 3 diagnostic COVID-19 testing stocks. I own 3 different ones because I like them all because of their earnings trajectories, and they're all kind of different. So, there's just no shortage of opportunities in this market across technology, healthcare, retail. There's always something to look for. You don't have to chase things at the highs.
Okay, that's really good advice. Yeah. All right. Well, we covered a lot on this episode, I feel, and I think it's going to help a lot of newer traders, people like your son who, are just getting into it and are, need some advice.
Hey, let me give you one more example. One of the CRISPR gene editing stocks, Editas, symbol EDIT. I have owned and traded all 3 CRISPR stocks, including Intellia, for 4 years. And I always own at least one, even if I'm trading and taking profits in another. So I tell the story that in CRISPR, I would take 70% gains or 80% gains on a swing, but I always owned Edit. I owned it for 3.5 years and never sold it, and watched it go from 20 to 35 3 times and never sold any.
Okay.
So then going into the ASH meeting in December, which is the American Society of Hematology, where the CRISPR companies were finally getting their due. They were presenting data where they are going to start human trials in sickle cell disease. This was really exciting. And I had just sold all my CRISPR stocks. I sold Intellia for 150% gains. I sold edit. I sold CRISPR, and all of a sudden I felt naked. I didn't have any CRISPR stocks, and here we go into ash in early December. Well, CRISPR Therapeutics, CRSP, starts soaring, and I'm like, oh no, they love this data for sickle cell and beta thalassemia. I better get back in edit. So I'm like, scramble, buy edit at $31. It went up 200% in 3 weeks, Tracy, because of the mania. Now, probably some of that was short covering. You want to talk about an early warning about short covering? The stock went from 31 to 99 in a matter of a month, and I did not sell. I did not sell with 200% gains because it was my only CRISPR stock, and I was going to hang on to it with bare knuckles if I had to.
Yeah.
And now I'm down to like 110% gain, and I'm fine with that because I think CRISPR gene editing is the future. It's the greatest discovery of the century of biology, and it's going to change the world. So that's my conviction in something like that, where I did my homework, and so I can sleep at night watching the big swings.
Okay, that's also good advice. All right. Well, there's a lot going on out there. So you want to be sure to subscribe to get the Market Edge podcast every week, or at least, get us somewhere on Apple Podcasts, on Spotify, we're on SoundCloud, we're on Amazon Music now. Get us there. And let me recap the tickers from this episode. So we did talk about GameStop, GME, AMC, the movie chain. We talked about this new concept energy, GBR. Chipotle is CMG, NVIDIA, NVDA. And the CRISPR stock is ticker EDIT. But again, be sure to get us somewhere, and I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.